Good afternoon, Bob Georgiou, Remax Cord, coming to you with another market report, this time from Concord, California. Early intro. So, Concord single-family homes are on a plateau, that same plateau they've been in that appears to have started around July of 2023, at least on paper. The single-family home market is stable with an 800,000 median, but there are signs that things are beginning to change. New listings are coming on the market below the median, which is showing a little bit of downward pressure on the market overall. At the median price, more homes are coming on the market than are selling, but they're still moving quickly at right around 10 days. High-end days on the market are at 42 days, and transition points in between are hovering around 30 days. Otherwise, the inventory has been following its annual trend. While the market has been a continuously strong seller's market, there has been notable pressure in the buyer's favor demonstrated in the increasing days on the market. Concord condo and townhouse market is finding a supply and demand balance point after what looks to be a 50% price square foot drop in the overall market. Inventory is leveling out after steep increases this year, with the hardest hit condos and townhouses at the top end of the market that are now at 70-day sales times, with lower priced units stabilized right around 30 days. The entry-level price point in the single-family market is $700,000, and that explains the days on the market in the condos, which at this price point with the Homeowners Association dues explained in the last video, buyers are able to find single-family homes in that price point without the dues and the other perceived negatives of living in condos and townhouses. The average price point of a condo is now around $400,000, and I expect this to continue on into 2024. That was a real quick briefing. There wasn't really much to tell on Concord because the market's been in transition over there. Even though I haven't been doing these reports, you wouldn't really know that. But nonetheless, the big news in the market is this week we went to NAR settlement. What this means to buyers is that buyers are now in control of their agent's commission, at least in theory. The process is now that the buyers will negotiate directly with the agents as to how much they pay, and the agent, the buyer, will now have to negotiate with the seller and the seller's agent his compensation as part of the total package. Of the offer that buyer submits on a particular property. So this first week, where exactly are we at with regards to the settlement and the public's perception of what's been happening? First off, a survey was done by NAR, and 3 out of 4 people out in the general world don't know what's happening. They're completely oblivious to the changes of the real estate market. So unless you're in the market or coming into the market and talking to agents, you don't know that there's been a change. There's 64% of consumers in general, whether they're in the market or not, believe that this settlement is consumer friendly and is perceived as overall positive for the market. I'm going to have to read this right off the page because this isn't clear. When they interviewed renters regarded this as a negative for the market. And what they said is 55% of renters who were briefed on these implications said that NAR settlement would be good for consumers and win-win for the industry, which is 10 to 15% below what consumers in general believe. And 24% of renters who were briefed on the details said the NAR settlement would be bad for both the consumer and the real estate industry, which is 3 times more than the average consumer. It's interesting how that comes to be. I guess renters are a little bit more in tune with the real estate market than are the average consumer who's either in a house and not planning on buying or selling a property in the plannable future, or own investment properties down the road. One thing that is notable is that U.S. adults who say they're likely to buy a home in the next 12 months show a direct aversion to paying for their agent's commission if the seller doesn't cover that compensation. in our area, that provides an interesting political dilemma because of the multiple offer situation and the fact that buyers are extremely cash rich in this area from stock market and tech stocks, uh, as well as having high equity in current homes if they happen to own one of those. It'll be real interesting to see how this shakes out moving forward with the sellers who do not want to pay. It's not called paying anymore. We're calling it concession. We're calling it a concession. So it'll be real interesting to see how the homes where the sellers do not want to pay a concession, if their prices are impacted the way agents have always represented that to be. What I mean by this is, let's take a situation where the seller was providing consideration for the buyer's agent as part of their sale. The buyer offered them $1 million, sale closed at $1 million, and the house right across the street suddenly comes on the market, but the seller is not willing to pay the buyer's agent's commission. Where a buyer comes in and not represented by an agent and says, hey, okay, there's no agents involved, so I will give you $950,000 for your property. I'm going to save the agent's commission. And then the buyer and seller had to negotiate from there what exactly any sort of consideration would look like without having any agents on there. This argument was dismissed by the court settlement as being a non-issue, but we will see over the next couple of years in markets where supply and demand look more normal. Our area has a lack of supply, so the supply and demand is way out of whack in favor of the sellers. And given the cash that's in the market, it's going to have less of an impact on pricing in this particular area. But say, for an example, out in Omaha, Nebraska, or Mobile, Alabama, where the supply and demand is a little bit more in balance, they've got room to build, and prices aren't as extreme as they are out here, we will see where the sellers fall, where the ones who pay a commission pay a concession versus the ones who do not pay a concession, if it shows up in the price and that fact that was dismissed by the Kansas court turns out to be a material fact. Time will tell on this one. Now I'm going to read this right out so you know it's not my opinion. Where it's from. This is an Inman story, by the way. Broker sent it out, and it was a really interesting story which sort of confirms some of these real estate misconceptions that are on the market. But I'm going to read this right off the page. Yes, homeowners are broadly intrigued by the idea of not covering buyer commission. I'm not going to read this next part because I'm advised in our area that the next part of this story, if you happen to have it, we're not supposed to say this. We're not supposed to say that if you don't offer a buyer's concession that it'll impact the buyers. It may or may not, especially in this area. It probably won't because there's just not enough houses out there. It will affect. It could affect the bottom line. It's not going to affect the saleability of the property. Back to the article. 36% of homeowners said they would opt to offer a full 3% commission if advised declining to do so might hurt the listing. Can't say that. They said it, not me. He said, Sue Inman. On the other hand, 24% of homeowners said that they would decline to cover a buyer commission and list it for full price, a gambit to take full advantage of the policy change at the risk of the possible sale of the home. Remaining 40% of homeowners who chose some in-between option willing to negotiate with the buyers for some sort of concession, which would, of course, add to the bottom line of their sale, of the proceeds of their sale. They also interviewed real estate agents, and we said, as a population, if you take a hard line on this thing, it will affect the marketability and your proceeds in the sale. I think I could say that. 3/4 of the market would heed real estate agents if they said this to them so. mental note. 2/3 of consumers might try to find some middle ground, and that's negotiating, folks. I mean, we do this every day when we talk to sellers, whether it be, hello, my name is Bob, I'm a real estate agent, to let's sign right here. It's all a negotiation. And 60% say that it'll improve our perception within the public. Well, clearly something's going on, because over the last 6 months, the perception of the real estate industry has increased in the consumer's eyes, which means that brokers' engagement with their agents has improved, and it is consequently making agents a little bit more conscientious about how they're handling the public in the face of these real estate changes. Um, with all the changes in the market that's going on right now, especially with interest rates and affordability and lack of inventory, depending on what your situation is, um, agents taking a much more conscientious approach is probably good for everybody in the long run. Agents, the market, consumers, etc. So, anyways, that's the news report this week that I'm going to speak on. I'm going to try to continue to maintain this format where I do a quick summary of one of the 4 markets. Next week will be Danville. Do a little bit of a news analysis, and then start sending these things out to you on a more regular basis. So, going to be interesting for the rest of the year. Lots of changes coming, changes in interest rates, changes in public policy, presidents, um, yeah, settlement enforcement and engagement, open houses, which is probably the topic I'm going to talk about next week. Um, it's going to be just an interesting few months going into 2024, in which case things will start to settle down, and we will go back to what the new normal in the real estate market will be. Anyways, this is going to be a little bit longer than I really wanted to go, but I appreciate you taking the time out for me. Bob Georgiou, Remax Accord, Central Contra Costa Realtor, reporting to you live from Danville, California. Go out there and buy something, and we will see you in escrow.